Okay, so in this video, we are going to look at QuickBooks for transport and trucking companies. A transport and trucking companies actually are involved in the business of transporting goods or passenger from one location to another. So most times you can probably say that these two businesses are almost the same. So the only thing is that transport seems to be a lot wider and more encompassing compared to a trucking company. For a trucking company, we're looking at a company that is involved in managing fleets of trucks and a fleet of cars. Most times they are mostly trucks or lorries, and then these trucks are involved, probably designed to help carry heavy products or goods and services from one location to another. And then transport company are also involved in transporting goods from one location to another. And most times, again, some of them are involved in moving passengers. So you can say that a trucking company is classified as a transport company, but not all transport companies are trucking companies. So, however you do the classification, they they all have the accounting system for both businesses are almost the same. So we can say that transport is general, while trucking is like an aspect of a transport company. So they almost have the same accounting system. So let's look at the chart of account for a transport company. We are going to be setting up a chart of account for trucking or transport company, like set up the income heads, which is delivery services, passenger services. So we have some of the income heads like delivery services or delivery charge, and then we have passenger services, and then you might also want to set up the direct costs to direct costs of and also add your bank direct cost of a transport or trucking company, which we've discussed here. So we're going to add all the fleet or trucking vehicles and then differentiate them by brands. So one important area that you must look into when setting up QuickBooks for a transport or trucking companies are the fleet of vehicles or cars that they manage. So these ones are actually designed to generate revenue. So they are like revenue center. They generate revenue for you. You also incur costs. So at the end of the day, you need to track transactions by fleet of cars or fleet of trucks so that you will know which of the trucks are profitable and the ones that are not profitable. Now, another reason why you do that is that there are times where you start incurring costs on different trucks, and it will be very important that you know the trucks that actually consuming most of the money, whether and then justify that amount you've spent by the revenue they've generated. So if they're generating as much as they are consuming, then you will probably need to keep them. But if they are not generating much compared to what they are consuming, probably the money you're spending on them, you may probably need to look into them again. And then you also have how a way to set up the same trucks as fixed assets, track depreciation on a and annual basis, and then how to add the bank account to the system, how to add different transport and trucking service charge. That's like your income heads, just like I explained here. Then create a customer account and receivable balance. So you can create customers account and their receivable balances. Then categorize your trucks, your business by department. So you can also categorize them, just like I said, by trucks or department. And again, how to add your vendors and payable balances, the direct cost of each of these trucks, like cost of truck repair and maintenance, fuel and diesel refill, driver wages and salary, truck insurance, etc. These are direct costs. Then how do you create an invoice for transportation services or passenger? And then you'll be able to map them to a truck or lorry. How do you create receipts for cash transaction? How do you receive payment from your customers? How do you record regular business expenses? And then banking transaction. How do you write check, transfer fund, use register, reconciliation? And then we'll then move to your financial report, where we discuss your income and expense, profit or loss by truck, trial balance, balance sheet, cash flow, and every other report that might want to generate on the system as far as trucking business is concerned. Now, another important thing you might probably note for a trucking company is when you receive payments from a customer, you can also record withholding tax. So some customers might decide to withhold tax from you, then remit to the government. So how do you record withholding tax on the system when a customer pays less than the amount of the invoice and decide to hold back the other balance? So we'll discuss that on the system. So let's quickly move to QuickBooks for proper demonstration of all that we've shared under the course outline. So this is the QuickBooks for a trucking and transport company. So I already set up a demo company. We call it CAT Trucking and Transport. And then we are going to be demonstrating each of the steps that we outlined right here to help us get the account for trucking company up and running quickly. So the first thing we're going to be looking at is your chart of account. So what is chart of accounts? An account that categorizes all your transactions to income, expenses, asset, or liability. So if you look at this section, we already have a chart of account that is so close to that of a transport and trucking company. Why? Because at the point of setting up this company, we selected our industry as transport and trucking. So it's easier for QuickBooks to give us a chart of account that is close to what we want. And then if you um, look at the income, you can see fuel surcharge, gross trucking income, and then you can as well add other income that you want to add to the system. You can call this passenger service if the transport company is also involved in movement of passenger. So passenger service, then we click on OK. We have passenger service as an income. Then your direct cost for your truck, you can see fuel of hired vehicles, which is fine. Then travel expenses for driver, truck maintenance costs, and then let's look at other direct costs as shared right here. We have repair, cost of repair and maintenance. So I think we already have something similar to that, which is truck maintenance costs. And then we have truck insurance. So if you actually pay for insurance just to cover that truck in case of any eventualities, you can also map that to your direct cost. Now, why are we calling it direct cost? Because they are directly tied to the truck. They're directly tied to the business. So insurance premium on trucks. So they're already tied to our line of business. So that's why, and that's also our operation. That's why we're taking them to direct costs. Every other expenses that is not tied to our business, we'll take them to indirect costs, which is a normal office expenses. So we move on to the next one. Once you set up all your chart of accounts, then we have delivery service and passenger service as our income line of revenue. So you come here, item, new, and then you add them as services. So this will be, you can call this trucking service. So when you generate revenue from trucking services, go to gross trucking income, you click on next, and then you come here again, passenger service, and then you take this to passenger service income. So that's how did I get here? You go to list, item list. Item list is where you add the revenue sources of your business. So however you generate your money, you need to add them right here under item. If you sell a product, you're going to add the products right here. If you sell services, you're going to render services, you're going to add them right here. So that's the importance of your item list. Every business must have an item list. Every business, because as long as you generate money, you must have an item list. So it's how you generate money that you're going to add right here as your item list. Then we have your how do you add your fleet of trucks and their brand to the business. This is very, very important. Adding fleet of trucks and their brand to your business is very, very important. So what are we going to do right now? We are going to add all the truck the system. Now, what's the best way to add all the truck to the system? There are two ways to do that. Number one, we're going to add the truck as fixed assets, which is very important. And number two, we're going to add this truck as a department. Now, why are they going to be added as a department? Because they are either They are one of this cost center, revenue center, or um, yes, cost or revenue center. So, but this truck is classified as a revenue center. Why? Because they generate money for us and then we also incur cost. They are profit center. I mean, that's what I was trying to call cost center, revenue center, and profit center. So we are not just generating revenue on the truck, we are also incurring costs on them. So it's important for us to be able to track transactions that are tailored to each of the truck. So how do you do that? You departmentalize your business by that truck. So we're going to add all the trucks and then put them on the system in such a way that anytime we generate an invoice, anytime we make payments, we'll be able to select the truck that's directly tied to that transaction. So we go to edit, we select preference. So anytime you want to departmentalize an organization, you want to divide them into different sections, you're going to use edit, preference, accounting, company preference, and then class. So class is what you use to departmentalize any organization, whether it's supermarket, no matter the kind of business you do, as long as you have different departments, you're going to use class to differentiate transactions by department. Now, the moment you activate that, you go to list again, you see class list. So this is where we're going to add each of the truck that we use to render services, each of the trucks that we own. So you come here, you put, um, let's say, Toyota Hilux truck 101. So we're adding Toyota Hilux truck 101 and then Toyota Hilux truck 102, Toyota Hilux truck 103, Toyota Hilux truck 104, Toyota Hilux truck 105, Toyota Hilux truck 106, Toyota Hilux truck 107. So let's you can add as many truck as you want. Now it doesn't mean that for you you're going to be adding Toyota Hilux. No, you're going to differentiate each trucks by their brand and their model. So it's very important to do that. So you that are actually going to be tracking your actual truck. What you should do here is to make sure you enter the name of the truck and their model. So that's also important so that you know the specific truck we're referring to. So, but here is just a demonstration of how you add the truck to the system. So you can see Toyota Hilux truck 101, Toyota Hilux truck 102. So we have been able to departmentalize that business. This is why we've done this. Now, once you're through departmentalizing your business, the next thing is to add admin office. Every business must have an admin office. So any expenses that you incur that is not channeled to either of these truck, you're going to map them to admin operations or administration or admin office. No matter the kind of expenses, as long as it's not classified on that truck, you have to classify them under admin. So your admin will most likely be your cost center. Then once you add all your truck to the system and a different brand, you're also going to add this truck as fixed assets to the system. So come here, you go back to your chart of accounts, so you can add your fixed asset to the system. So you come here, account, new. So we call this our fixed asset. Then you have your truck 101 added right here. Then you click on new. You have your costs, which will be a sub account of your truck 101. You click on the, so here you have the balance. So that's the value of that truck as at the time we're setting up our book on the system. You click OK and then you click save and new. So this is station and then which will be a sub of the same truck right here. And then you add sub truck 102. You do the same thing. You come here, you add the cost of the truck. So at the time we're setting up system and then as at this period, this will be a sub account of truck 102 and then you have your depreciation which will be a sub of our truck 102. So this is how you set up a depreciation for each of the truck. You can see you have truck 101, you have your cost and accumulated depreciation. You have truck 102, you have your cost and then accumulated depreciation. So we have them right here. This is very important so that when we go to our companies and financials, you check your balance sheet, you are able to see the truck you can see here, and then the individual cost. So if there's any depreciation on the truck, we'll have them stated right here. So that's how to set up your truck and then also prepare them for depreciation on the system. Then the next one is how do you add your bank accounts to the system? How do you add your bank accounts? Every business must have a bank account. So you come here, you click on chart of accounts, new. Remember, if you've studied my video very well and then pay attention to my chart of accounts, I always talk about chart of accounts being the backbone of every accounting system. So whenever you want to add an item, it is not the name of the item that matters. So when I'm setting up an account and I call this Welfago, it doesn't mean that system will recognize this Welfago as a bank account. Why? Because um, system does not use the account name to determine how an account will be treated. It uses the account type. So the account type must be bank for transactions that passes through this account name to be treated as a banking transaction. If I switch this to income, this automatically becomes an income transaction, not a banking transaction. So anytime you add your bank or whatever account head, either bank, account receivable, fixed assets, make sure you select the right account type when you are adding that account. It is the account type that determines how that account name will be treated. So system is going to treat Welfago as a banking transaction because the account type I selected is bank. And then I can as well impute the balance in that account as at 31st of December 2022. Then I'll click on OK and then save and close. So I've added this bank here. So let's quickly add another bank to the system. New bank, and then I'm going to call this Bank of America. Here, I'm going to set up your opening balance on that account. And then this will be as at the end of last year. Okay, save and close. So I have this. I have my Bank of America stated right here. I have my Wells Fargo. So you can add as many bank as you want. And then if you also receive cash, you can as well add your cash account. Note your cash account has the same feature as your bank account. So you need to also note that. So don't expect to see cash account on the account type. It's still bank. So we come here, you can call this cash account or cash collection. Then how much do you have? So you have 24,000 right here. You click on statements, dates, okay, and then save and close. So you can add as many bank as you want when setting up this. Now you might also want to differentiate your account by maybe revenue operation, expense operation. System also gives you that room to set up your account like that. So you can also create sub account of a bank. So that way you are able to track the transaction in each of the sub accounts and then the bank as a whole. So that's also what you can do. So for you to do that, you add your bank, then you add another bank as a sub of this particular bank account. So let's quickly demonstrate that. I can go to um, this region and then select my banking, click OK. So I can probably say, let's assume that um, I have like a wallet, like a wallet with Morgan Stanley right here. Let's assume I have a wallet with them. So that I probably use to keep some of my funds. Then I can click save and new. Remember, I'm not going to add my opening balance right now. Then I can come here and say account one, which will be a sub account of this Morgan Stanley wallet. And right here, I'll put this and then my statement ending dates. I can click on save and new, and I can as well add account two and then quickly select as a category and then impute the balance here as at the end of December. And again, I'm going to do save and close right now. So you can see right here, I have the balance in this account, 78,000 plus 340. That will give me 4 18. So if you go to report and then balance sheets, you can see how the system is able to set up. So why is the system giving us this kind of report? Is because at the point of setting up each of the accounts, we selected the right account type. This is the importance of chart of accounts. If your account are properly set up, then you should be able to get the right report when it's time for you to generate your financial report. So let's move on to the other one. So we've added our bank. Now, add different transport and trucking service charge. I've done that already. That was why I added as an item. So this is like revenue head, passenger service, trucking services, whatever name you prefer to call it. So you have that already set up on the system. Then we move to creating customers and their receivable. Now, as a trucking company or transport company, I'm sure you have a lot of receivables. You have a lot of customers that you provide services to, either transport services or passenger service. So there's need for you to have this customer details set up on the system. So you can also come here, new. So you can see we have a client called Farm Tech. So Farm Tech Limited, we provide transport services for them, maybe by conveying their goods from the farm to the marketplace. So you set them up as Farm Tech Limited, you click on OK. You can as well fill in all this information about the client, maybe the company contact person, the job title, the phone number, email address, whatever information you want to fill, you can as well fill them right here, Farmtech Limited, and then you click on OK. So this is it. Then if you want to add another client, you come here, new customer. So let's say you also provide trucking services. You have an agreement with FedEx to provide trucking services for them. Maybe your truck is being branded with FedEx logo, but you own them. So you can come here and put FedEx Limited or FedEx PLC, whatever name you prefer to call them. Then if they have opening balance, you come and you impute the balance, which is the amount they owe you as at the opening balance date. So you impute that, you click on OK. So you can add as many clients as you want. So every client that you serve as a trucking company, system gives you room to add them. What if you have multiple clients? You have bulk clients. There's room for you to do this. You can add multiple customers or job. So this will help you add as much client as you have. Let's assume you have 100 clients that you served. You have 200 clients, and you don't want to lose them. You can as well bring in the name of the client in bulk from Excel. So what you do is you click on customize, you take out each of these item here. So you then ask, what information do you want to bring in? Number one, you want to bring in the name of the client, you add the name. Number two, you want to bring in the balance of that client, the opening balance date. You want to bring in contact information of that client, the address of that client, whatever information you want to bring in, system gives you the room to do that, and then you click on OK. So why are we doing this? It's because we want to export from Excel into QuickBooks. Now, the same way you have this column, name, customer balance, opening balance, that's how you also have the information arranged in your Excel, meaning that on your Excel sheet, the first column must be name, second column must be customer balance, third column is opening balance, and then the fourth column is bill to. So why are we doing that? Is because when we copy from Excel into QuickBooks, system is going to match them automatically. So if the first data is name and on Excel the first data is customer balance, it's going to put customer balance on that name, and that will be wrong. So it has to be arranged accordingly, the same way it is on QuickBooks, so that when you run your import, and the way you import is to copy and paste. You copy and then you paste right here. As long as each of these column matches the one you are importing from Excel, then name of the customer goes to name of the customer, customer balance automatically imputed in this field, and then your opening balance dates, then bill to. Same thing also happens right here. So that's how to import from Excel into QuickBooks. So I hope this is clear as far as import of customer is concerned. Then we have our vendors and their payable balance. Vendors are the product suppliers or service provider. So let's say we have a company like Truck Repair Service Limited. So this is the name of the truck, or let's say CRK Auto Repair. So these guys actually engage in repair of our truck. So you come here, you add them as a vendor. Now, if there's any balance payable to them, that's what you're going to impute right here as the opening balance. And then as at 31st of December, you click OK. So if you also have other vendors, maybe you have a vendor like Mobile, fuel station, for purchase of fuel. You also add maybe fuel station. So every service providers and product suppliers are going to be added as a vendor to the system. Now, the question again on customer center is what if a customer makes an advance payment at the point of setting them up rather than probably imputing the account receivable? What if we have a credit or they have a credit with us? It's very simple. You can come here and add another client. Let's say you have a client like Cement uh, Co. Limited. So these guys are actually engaged in the sales of cement. So we help them supply cement to their customers. Now, at the point of setting this up, assuming that they have a credit with us, so rather than them owing us, we're the one owing them, meaning that they made an advance payment, but we're yet to render that service. You have to put minus 560. So there's a huge differentiator between adding a figure with positive and negative um, number. It's very, very significant. So this tells the system that this customer has a credit with us and not a receivable balance. So you come here, you impute that. So you can see right now the system is going to take this as a credit. Okay, this right here. So minus 560, and then you have this right here. So these are not the same. This is a credit and this is a receivable balance on the system. So let's move on to the next outline. We've added customer, we've categorized our businesses by different trucks and departments, we've added our payable, then our direct costs on the system, we've added our direct costs to the system. So how do we create an invoice for services rendered? It's very simple. So to create your invoice for a trucking company, or to record transaction for a trucking company, you go to invoice. So if your trucking companies require you to send a quotation to a client before it becomes an invoice, you can start with a quote. So meaning that you're going to send list of your price. But if it requires you to, assuming it's a regular customer, you come here, you create an invoice. So whichever one you want to work with is fine. If the customer is saying, can I see a quote to transport maybe farm produce from one location to another, you can come here, you send them a quote, you go to quotation, you select the name of, let's assume you're using farm tech, and then you're rendering trucking services to them. So you can say being transport of farm produce. Then you can also customize this quantity. So quantity probably depends on with whatever you're transporting. If you price it by quantity. Now, if it's a multiple project, you can as well select different, like assuming you have 3 or 4 trucks that are engaged in that. Doesn't mean we're going to select class ones. So on the system, you can go to formatting under estimate. I can as well select different trucks that are engaged in that services. But we don't know the truck that are doing that yet. So this is just a quote. So we can't select the truck that will be available. So you quickly come here, you quote for the services and you say, oh, this is let's come here again and add another trucking service, same being transport of farm produce. So let's assume they want to hire 2 truck for that service. And then, like I said, quantity depends on your pricing plan. Maybe you price by quantity of the product, and then you can say, oh, this is what we charge per item. Or maybe you have a flat rate, whatever, depending on how you charge them. So you can probably use the quantity to track that. If it's just a flat rate, you can as well come here, click on formatting, customize data layout, and then take out, you click on column, you can take out the quantity to state that you have a flat rate for your trucking service. You can see here, and then you input this as 25,000. So input this as 25,000. So we have this. Okay, so this is just a quotation that we are preparing, and then you click on save and close. Now, if the customer is saying that, okay, I'm fine with the quote, I'm fine with the proposal you sent to us, can we get started? You can then invoice. Now, the moment you use invoice, you assume that the customer is owing you. That's why invoice is only used when the actual transaction, when the actual services have been rendered, or probably you've rendered that services. That's very important. Or maybe the customer is saying, send us an invoice. Why we actually why the truck is on their way to their destination. So you can also create an invoice. But note that the moment you create an invoice, it becomes a receivable, and that assumes that the service has been rendered. So if the service has not been rendered, do not create an invoice. You can see right here, system is telling us that we have a quote that we've prepared in the name of that customer. Are we transporting? Are we importing the quotation into invoice? Yes. You click on OK, and then what percentage are we doing? Are we doing 100%? So this helps you create progress invoicing. So the client will say, okay, let's pay you 50%, or your policy could be, okay, we're going to do 50% upfront before the job, or upfront before and then 50% after. You can depend on your own agreement. So that's when you use create invoice as a percentage. If a client is going to pay you a certain percentage of the invoice, then, if a client is saying, okay, give us 100%, we want to pay you 100% of the invoice, you can as well come here and do that. But my strong advice is make sure you create invoice for the value of the product or services rendered. And then you can use receive payment to take the money on installments. So you click on OK, so that brings in the value of the services rendered into our invoice. So right now, we can then come here, formatting, customize data layout, column, and then you can activate our class. Remember, we use class to departmentalize our operation. So that's why we have to activate class right here. Why do we need to activate class? Because these services are actually handled by two different truck. So I can come here and say this is for truck 101, then this is handled by truck 102. So we can state that. So whenever you have different trucks that are probably providing the services to a client, this is what you do. And if you have more truck that are going to be engaged in that services, you come here, you add trucking service, you say being transport of farm produce. So this is going to be farm produce, and then you can then handle by truck 101, truck 102, truck 103, depending on how you do them. And then you can impute the rate right here, and then this is going to be handled by truck 103. So let's assume this is additional services requested. Now, what is our payment term? Payment term is when the client is supposed to pay us back uh, the money stated on the invoice. So if I set the 30 days, it means this invoice is due in 30 days. And if any invoice becomes due in 30 days and the payment is not received, it becomes an overdue invoice. So that way, system can classify them under invoices that are overdue. So that we'll find under aging summary, where we'll look at invoices that are beyond certain period, and then follow up on the client. Then I can as well click on save and close on this system. So what have I done so far? Sorry, let me close this and go back to our invoice. So this will be bin, save and close. So I've done that. So for doing that, if we go to companies and financials, profit or loss by class, and then we select all dates, you can see right here we have truck 101, truck 102, truck 103. So we are able to see the money generated by each of these truck. So that's what we've done so far. Gross trucking income. You will see how much truck 101 has generated, truck 102, and truck 103. So that's the essence of departmentalizing your operation. So when you create an invoice for services rendered. Now, What if there are costs incurred, maybe cost of repair and maintenance, fuel refuel, or whatever cost you're incurring? How do you track that? That depends on the expense type. If the expenses have been incurred but no immediate payment, let's assume that we needed to repair truck 101 but no immediate payment was made, you're going to use enter bill. So enter bill is for expenses that you've incurred with no immediate payment. Write check is for cash transaction. So you need to note that. Now for invoice, when you render a services that the client is expected to pay you later, or you are billing a client to receive payments at a later date, you're going to use an invoice. But assuming the client is saying we want to pay you immediately the service is rendered, then you can click on sales receipt. With sales receipt, you're saying this is a cash transaction. There is no upfront payment. So there's no payment that is being postponed to a later date. Now, again, what if the client is making advance payments to you? There are some clients that have an account with you and they're saying, okay, can we pay you certain amount into the account? And over time, we will keep using that services based on the amount that we owe you. So you can as well do that. Let's say you have a customer account where you can check all the balances that the customer have, all the credits that the customer have. You have regular customers that pay into the account, and then when you provide trucking services, you invoice them and deduct the balance from the credits they have with you. So let's use one client to demonstrate that. I will go to company. Let's use a client that have a credit like this Cement and Co Limited. So this is a perfect example of such clients. 560. What does that tell you? It means that the client paid into your account, but you're yet to provide trucking services. So anytime they call for trucking services, you're able to invoice them and then reduce this balance. So for clients like this with credit, whenever you invoice them, the system is not expecting you to receive payment. All right, the system is supposed to use this invoice to knock off the balance that you owe them. So if you go to Cement Trucking Limited right here, you can see for the fact that the balance is in negative, it means they have a credit with you. Then you can as well come here to input um, passenger and trucking services. Then let me see, I think, okay, this is invoice, passenger and trucking services. So let's take out the quantity if it doesn't matter. So if you need quantity, maybe you price your item per quantity of products that they are selling, you can as well input them right here. So let's use that. So let's assume this is for truck 101, and then you have 10, 100, and we charge 1,500 per item. So if it's an item that you have to build, if it's a services that you have to bill per item, so you have 100 times this, so that's 150 USD. Then I'll click on save and close. So I can come here and say on the 3rd of January, I'll click this. You can see this customer has available credit that can be applied to this invoice. Would you like to apply those credit to this invoice? Why? Because the customer has a credit. You can see it has a credit. So that's why the system is applying the invoice to the credit. The credit was 560. Now, if you apply 150 to 560, it's reduced to 410. So you can see what the system is doing. So the scenario for this invoice is different from the first one. The first one, we actually invoice them for services rendered, and from their account, they owe us. This one, we invoice them for the same services, but from their account, they have a credit. So we are not expecting payment on this scenario. Why? Because the customer has a credit. Rather, we're supposed to use that invoice to knock off the balance in their account. So when I'll click save and close, you can see right here, the customer has a credit of 560, the amount of the invoice is 150, then the credit balance reduces to 410. Then I'll click save and close. So if I go to report my customers and receivable balances, you can see right here, if I double click on this, it will show me a statement. Initially, they had a credit of 560. We applied an invoice of 150. Then the other scenario right here is saying that we invoiced them 75,000 naira. So we are expecting them to make payment. So let's receive payment from the clients that owe us. We go to receive payments. Now, I like to do something. When I receive payment from a client on QuickBooks, I don't like to go to receive payment and at the same time record deposit. So I can as well make this receive payment window to have record deposit. So I want to combine record deposit and receive payment together. So I'll come to edit, preferences, payments, company preference, and then on the so what happens is anytime you receive payments in QuickBooks, system takes that money to an undeposited fund account. But because we know where the money is going to, we don't have to map it to undeposited fund. That's why I'm probably on checking that undeposited fund as a default deposit account. So the next thing is whenever we receive payments now, we are able to select the bank where the money was paid into. So I'll go to home and then select receive payments. So you can see right here that under receive payment, you have deposit too. So this was not there before. I had to activate that. So when you receive payment, by default, it will go to undeposited fund. But because we know the bank where the money was paid into, we're going to select. So let's say this money was paid as cash. So you go to receive from Farmtech Limited. And Farmtech Limited, they owe us 75,000. Now they are paying 70,000 USD into our cash account. So that means they brought out 75,000 USD. So what happened when you receive payment that is less than the actual invoice value? System gives you two options to either leave it as underpayment or write off the extra amount. So assuming this is withholding tax, the client is saying, I have paid you, I'm not owing you anything again. What are we going to do? We write off the extra amount and then you click on save and close. So what account are you writing that extra amount off to? We're writing it off to withholding tax account. So this will be withholding tax receivable, which is going to be a credit to us. So we set up withholding tax receivable as current other current assets. So until it's paid, and then we have our tax credit, tax certificate, it still remains our receivable. So this is supposed to be a credit to us. So you come here, and then under our class, so what truck are we classifying this to? Let's say truck 101. You click on save and close. So you can see how we've moved from creating an invoice, most importantly, mapping the invoice to their relevant truck. That is very important. And then when you then incur expenses, let's say on truck repair, you go to enter bill. Why are we using enter bill? Because payment was not made. So it's like a credit transaction. So you go to invoice bill, you select truck auto repair limited. So maybe let's say truck maintenance for like three trucks 101, truck 102, truck 103. So you can come here. Now, what are we going to call this? This is going to be a direct cost. So you say truck maintenance costs, and truck maintenance costs. Depending on the issue, truck maintenance costs. So how much are we paying for this? This is 4,500. This is 7,800, and then 3,400, and then 2,500, 3,500. So why are we doing this? When we are maintaining each of the truck, and this first one is mapped to truck 101. This is mapped to truck 102. This is mapped to truck 103. This is mapped to truck 104. So each of these trucks has their own individual issues, and it's based on the issues that or challenges or problem, the technical issues. It's based on these that the company is billing us for the service. So you quickly come here and you map it to each of these truck. If this transaction is related to a particular customer, maybe we're actually repairing this truck because of a major project that's coming forth very soon. So you can come here and farm tech, farm tech. So why are we maintaining this truck? Because we have an upcoming supply coming soon that is connected to farm tech. So if it's a billable expenses, you can see right here, but this is not billable expenses. So why do we call it billable expenses? If we intend to invoice the customer these expenses, maybe we're incurring these expenses on behalf of the customer. That's where we have this billable. But now it's not a billable expenses. So total is 19,200, and then you can input the reference number, which is the invoice number. So what does it tell us? It means that these guys are billing us 19,200 for repairing and maintaining each of these truck. That's why we're able to map them to their individual truck. So we know how much we're spending on truck 101, truck 102, truck 103, and truck 104. So when you're done, you click on save and close. Remember, this is a credit transaction, it's a bill. We're here to pay them. The same way you have your invoice. So for us, we are receiving an invoice from them. We're receiving a bill from them, sorry. While to them, they are sending an invoice to us, but both are the same. So we click on save and close. If we go to our reports, and then one of the reports you're going to appreciate more with this customization is profit and loss by class, because you're able to see all the income and expenses by truck. That way, you can see right here, you can see truck maintenance cost, truck 10145, truck 10278, truck 10334, truck 10435. So that's the advantage of this customization. You're able to see transaction by truck, how much each truck is generating. You can see the profit and loss position of each of the truck. And you can see right here, truck 104 were already at loss at 35. That means it hasn't generated any revenue yet. So at the end of the day, you're able to see the top performing truck and the trucks that are actually consuming most of your expenses. So that's now assuming that you want to pay them, you click pay bills. With pay bill, you can settle your vendor. So out of this 19.2, you can settle them whatever amount you want to pay them. And if you're paying all, you click this and then uh, select the transaction date, you pay selected bill. So whenever you incur an expenses with no immediate payment, you use enter bill and then use pay bill to pay them later. But if it's a cash expenses, you use write check. So write check, I can also come here to say farm tech. Oh, we have a special issue on that. Let's say payment of driver salary, which is also a direct cost. Travel expenses for driver. Then let's say we're paying the driver 5,600 on which of the truck. You can as well truck 101, so and then truck 102, truck 103, truck 104. So here I can say travel expenses for driver of each of the truck. Travel expenses for driver, travel expenses for driver, and then finally travel expenses for driver. So here you can state 7,000, here 35, 45, sorry, 1 4. So depending on the level, and then in respect of the same farm tech, so you can click, you can select different customers if that repair and maintenance is tailored to different customers, and then if this travel expenses for driver is also tailored to different customers, but they are the same. But make sure you do the right thing by mapping them to their relevant truck account so that you can categorize those transactions by truck and able to generate right reports as far as truck is concerned. So we've posted this is cash expenses. We are not owing anybody. We're making immediate payments. So that's what we've done so far on each of the truck, which is what we have right here. Then if I go to reports, companies and financials, and then my profit or loss by class, this is the most important report we need as a trucking company. So you can see here travel expenses for driver. You're seeing, so that way you'll be able to know how much each truck has generated as profit, what they have generated as income, and then how much you spent on each of the truck, either for expenses or whatever direct cost you incur. Then doesn't mean that you won't be able to generate your overall financial report. This is for the company as a whole. For tax trucking company, you can see overall profits as a whole. You can see right here, there's already a loss of 3,392,700. Now, if the company is trying to probe to know why are we incurring loss, maybe we want to restructure, maybe some trucks are not profitable, it's time for us to sell off some fixed assets. This is where they need to get information, profit and loss by truck. You can see from here, you're able to see the truck that are not profitable right here. Like here, it's time to dispose truck 104. Truck 103 is profitable, truck 102 is profitable, truck this is profitable. So by the time you dispose this truck, it should add more cash flow to your business. So this is the importance of profit and loss by truck on the system. So we've received payment from customers, we've recorded deposit. The next one is to record our regular business expenses. So we've already discussed that. If you want to record the regular business expenses, you can come here, write check if it's a cash payment, and then let me go back to write check and select the bank where the money is coming from, and then you can also select the provider. So let's say this is again for fuel station, maybe filling station. So you're refilling. So if it's a direct cost, you can map it to fuel fuel of fuel for hired vehicles, then you can actually select the truck. But if it's an office expenses, so let's assume it's for computer and internet of expenses. So right here on that class, we're going to map it to admin expenses, admin office. So this is not tailored to any truck, and then you can impute this as the value and then click on save and close. So you can use write check to record business expenses, but if it's a credit expenses, you use write check. But most importantly, whether it's enter bill or write check, make sure you map them to the relevant class, either directly tied to truck, either they are directly tied to a truck or office expenses. So we move on to the next one, which is our banking transaction. So under our banking transaction, you are able to do fund transfer. Remember, we received cash earlier on for one of our customers, which is 94. You can transfer the cash to, let's say, Morgan Stanley wallet account one. So 94,000 USD, and then you click on save and close. So with transfer fund, you are able to move the money. So if it's directly tied to a truck that generated that amount, you impute that. So I'll go to reports, sorry, banking, use register. Let's see how the transaction is being recorded now. Cash account. So you see on your cash account, you have 94,000 already moved to sorry, Morgan Stanley. And then you go to your banking, use register. You also have your Morgan Stanley account one balance increased by that same amount. So that's how to move money from one bank to another. Under banking, we've already discussed write check. Then you can make deposits to your bank. You can transfer fund like I showed you. You can also do reconciliation. With reconciliation, you're able to reconcile your bank account with your cash book. So I'm going to dedicate a video on reconciliation on this channel. So just watch out for that video. So kindly click the subscription button and turn on notification bell so that when I share a video on how to reconcile your bank account easily, you would also get a notification on that. So that's for banking. So other things you can do on your system, we've discussed that on the banking. Then our financial reports. So everything we have been doing so far is already building our report from our profit or loss, which I've showed you. You can see. So one of the most important reports you would need to generate right here is profit or loss by class, because it's able to differentiate all your transaction by truck and also show you how much you're incurring as admin expenses. Then you're able to check your customers and receivable balances, how much they owe you. You can also check aging summary, customers that their invoices are due within 1 to 30, 31 to 60, 61 to 90. You can change these intervals. Like here, this is 30 days, 1 to 30. I can change this interval to 25. Then you start with 1 to 25, 25 to 50. So I can move on to other reports. You can check my revenue report, sales by customers. It will show me all the sales I've generated and each of the customers that generated that sale. And then I can check my vendors and their payable balance. You can check your banking. You can even generate a trial balance too on the system. The trial balance will show you an extract of all your account balances. You can see right here for audit purpose. You can export and send to your auditor for review. You can also generate company snapshot, which will show you a brief, like an overview of your business and how you are doing. You can see right here, income and expense trend, previous year income comparison, customers who owe you money, previous year sales comparison, top customers by sales. You can see your relevant account balances on the system. So that's just a brief of everything you can do, or most importantly, how to customize your QuickBooks for a trucking company. So I hope we've been able to share insights on how to use QuickBooks for your trucking company. And if there are areas you need clarification, if there are specific transaction cases that you want us to talk about, you can probably reach out to us or connect with us with the contacts in the description below. This is a summary of how QuickBooks can work for a trucking and transport company. If you run a passenger service company, everything we've demonstrated here still works. The only difference is that when creating your invoice, rather than selecting your trucking services, it's going to be passenger services. And if you charge per passenger, you're going to have that recorded right here on the system. So your quantity here will be the quantity of passenger in the bus. The rates will be how much they pay per passenger, which will give you the total. And then here you will then have the bus or the transport bus or the vehicle that conveys them. The same way you have your trucking company. So let me quickly demonstrate here. So I'm invoicing, let's say FedEx PLC for passenger services rendered, and then they have transporting 20 passengers, and then the cost per passenger is 5,000 USD. So let's say 500 USD. So you see here, and then under this class, we're going to call this, let's say, lorry. We're using the lorry, or let's say, um, Toyota bus. Okay, so that's the same class. So unlike just like the first one where we selected truck, here we're using bus. We tag them, we enter very relevant information we want to enter, and then you click on save and close. If I go to my report, profit and loss by class, I will be able to see the transaction on that truck. Toyota, let me see here. Okay, this is Toyota Hilux, Toyota Hilux. Let's see if we can find that. Okay, this is it here. So you can see. So just the way you have your trucking services, you're also able to use that for your passenger services. So they almost have similar way of being treated in, or similar way of customization in QuickBooks. So that's exactly what you need to know as far as QuickBooks is concerned, and how to customize it for your trucking